Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, February 10, 2015. Daily chart of the SPY. Here's our famous blue trend line, and today we had a nice positive up day, moving away from the blue trend line. But where are we? So we're actually into what I'll call this a resistance point. This is the high from the other day. Remember when I said the market could get up to 207, 207 and a quarter, and then the other day on Friday we got up to 207.24. Okay, and then today we came up and we hit a high of 207.12. So I think this is probably more formidable resistance than it looks like, even though it's a one-day deal, only because just above that is this day here on the 31st of December. That had a high of 208.19. So I think in between this area now, in between 207 and 208 is going to be formidable resistance. I don't see the market getting above these highs on this move, and one of the main reasons is I don't see the conviction buying on the volume side. I'd like to see more volume on these type of up days, which would tell you that more institutions are involved on the buy side, and it's not just market floating up and kind of the program trading or the high frequency trading. I want to see real buyers in there, and when I don't see the kind of volume that I'm looking for, I don't see real buyers, I find it hard to believe that we're going to get much above this area. So we'll have to see how that plays out. But we are getting a little farther away from the blue trend line, and even if we went sideways here for a week or so, we could be setting up for another move higher. However, I'm not sold on the upside yet. I'm not saying we won't see higher prices sooner or later. I just am not sold that we're going to see all that upside in this move here. So we'll take it one day at a time. I'm not reading into today until we can close above this high here. Once we close above this high, maybe we will take a run at the double top here and take it from there. But right now, I don't see it happening. It's just more of a gut feeling. I don't really have a technical reason why, other than the volume and other than it's just a gut feeling. I don't think we're going to bust through on this move. But we'll see what happens. And I have some clues as to why. So let me go through some of those. Let's look at the IWM. All right. So we look at the small cap index. This is the Russell 2000 index, and the S&P was up today a little over 1%, and the Russell was up a little less than 0.5%. I think. Let me just double check that. Yeah, it was less than 0.5%. So that in and of itself, and I always like to look at the Russell for a leading indicator on the up and the downside. And I'm not saying it's leading the market down. It was still up today. But the point is when it wasn't up with conviction, meaning that the volume wasn't there sending it up just like the S&P, and that it was up less than the S&P, which means less money was running into more risky assets. Let me say that again. Less money was running into more risky assets, right? So we had money running into the Dow and we had money running into the S&P, but the NASDAQ too. So the NASDAQ performed well. So this is a little contradictory between the NASDAQ and the IWM, but usually you see also the money running into risk assets in the IWM, and that didn't happen today as much as the other indexes. So it's nothing I'm going to say tells us one thing or another, but it is something I'm going to note and say, well, the IWM was a little weaker, so it's just one more clue. Let's move on and let's see what other clues we can find. And tonight I'm going to discuss something that we don't talk about all that often, but I want to talk about the bond market, and here's the TLT. Okay, so the TLT has been coming down while the stock market has been going higher. So this pretty much looks like a mirror image to, let's see, this day here was the 30th of January. Let's go back to the SPY chart. All right, and the 30th of January was right here. Okay, so there was your bottom in the stock market, and then back to TLT, there was your top in the bond market. Okay, and now you've sold off, and you're coming into a 50-period moving average, and right above, or pardon me, below the 50-period moving average are two pivot highs. You have one here, okay, and you have one here. All right, so that's at about, let's call it 127.5. That's kind of a semi-round number. 127.5 in the TLT. Today we closed at, the close was 129.41. Okay, not that far away. Now, let's look at something else. Let's look at the 10-year bond yield. And I'm going somewhere with this, so bear with me, okay? TNX, 10-year bond yield. So this is the inverse of the bond market, is the yield. Yields go up, bonds go down, vice versa. So now you have the yield coming into a 50-period moving average, and the yield is also inverse the bond market, but it's also been in lockstep of late with the stock market. Okay, so yields bottomed when the stock market bottomed, and they've been moving up with the stock market. So where can we find a top in yields? Can we find a top in yields? Well, we're at about 2% right now. Okay, I don't think we go much higher than this 50-period moving average. Maybe we pierce through it a little bit. Maybe we get up into this area here. Okay. But much higher than that, I mean, maybe 2.1%. I don't even see that high. But anywhere in between the 50-period moving average and slightly higher, maybe on the outside of 2.1%, right, this pivot high here, that would be, in my mind, a temporary top in yields, bottom in the bond market, and I think yields would reverse. And if yields reverse, I believe the stock market would reverse along with it, because if money is going into the bond market, right, if yields go lower, bonds are going higher. Why are bonds going higher? Money's going into the bond market. Where's it coming from? It's coming from risk assets, coming from the stock market, coming from the S&P, the Russell, the NASDAQ, going into the bond market. And if that happens, okay, and it's going to happen around this area here, we're probably not that far off. And that goes back to the S&P. Let's go back to the SPY, okay, talking and typing. Back to the SPY, and where does that leave us? If we're going to have a little bit higher yield going on, we have a little bit higher stock market going on, maybe we get to 208. That's my top end for now, okay, as long as I'm putting the clues together in terms of a weaker IWM, a bond market that has been selling off, yields going higher. I think that's going to come to an end. And so my clues are telling me that we're probably closer to a temporary top in the stock market, and that's why I don't think we're going to bust through in a nutshell. Okay, let's move along. Let's talk about crude oil, okay, because crude oil, I'm typing in crude oil. Let's go to the USO, okay. The USO put in a down day today, and remember when I said back here that we had a daily cycle top, and then it played out, and then it wasn't playing out, right? So the next day it played out, and then the day after and a couple of days following, we had an up market, but we couldn't close above it. And then it gripped the market again. The daily cycle top gripped it again, and we came down. So is there more downside here? We came down to about $50 in the price of crude oil. Our low today in the USO was $18.67. I'm not sure. That's one of those things where if I'm telling you, I'm really taking a guess. I don't know if there's more downside right now in the price of crude. We can trade sideways for a little while. Do I think there's a lot of upside coming? I'm not sure. I don't think so. I still think that there's a weekly cycle that's topping this week. So if we're going to see a spike in crude, it will most likely happen this week. And how high would a spike take us? I just can't see it taking us much more into this 50-period moving average. And if I go over to a price of crude oil, I'm on another screen on another chart, but I'm also on a daily chart, and I'm telling you that I don't think it could get much above $54.5 to $55. And that's the price of crude futures on the March contract. and that coincides with about this level 2050, let's say, in the price of USO. That's where I think the top end is for now. If something else develops, we'll talk about it here. I'll tell you about it, and we'll change our mind. But we let the market tell us what to do. And right now, the market's telling me that's the top end for crude. And right now, we're kind of in no man's land. The daily cycle is kind of playing out. I don't know how much lower on this move we'll get than $50 on the price of crude oil. We'll see what tomorrow brings, and we'll talk about it then. We'll just play it one day at a time. But when we see a trade setup, I'll let you know. And we'll see if we see a daily bottom or a daily top, anything like that. I always let you know. And that's the way we're going to play it. Gold. Let's finish up with gold tonight. And the, whoops, hit the wrong chart. Gold. Are we going to get gold up here? I'm sorry, folks. I don't know why that wasn't registering, but here we are. Okay, sorry about that. So gold is still floating around, and I think we're going to put in a bottom here pretty soon. The GLD, okay, let me talk about the price of gold futures first. And when I talk about gold futures, I'm on the April gold futures contract, and right now we're trading at about 1237. This is in the Globex aftermarket session, up about $5, right? So I don't think we're going to get much below, if we continue down any further, below about 1220. I don't know, maybe 1210. I don't even think we get to 1200. And if we do, it's a buy, and I'm starting to accumulate gold. I'm starting to pick it up on down days because I think there's more upside to be had. So between now and 1210 translates to, maybe this area here at about 117, 116.50 in the price of GLD. That's about my downside on GLD right now. I don't see it getting much below that area. So as we come down in this area, I think you could be a collector of GLD. If you're a gold bug, this is your spot down here. I think we'll make another run at these highs and maybe even surpass it. And that could happen this month. But remember, and I told you this before, February could possibly be a monthly top for gold, and that could mean a down 2 or 3 months. But keep in mind, a monthly top is plus or minus 1 month. Well, now we're in the plus 1 month, so it still could go up through February into March, and I still think there's higher prices. So that's the way I'm playing it until the market tells me something different is going on, and when it does, we'll talk about it here. And for tonight, I think we're going to wrap it there. Hopefully it's helpful, folks. I'm David Frost, MyStrategicForecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.